You just missed out on 170 pips. I'm gonna break down how I caught 170 pips on a buy for gold against the US dollar. Let's get straight into it. I'll be showing some concepts. In a later video, I'll break down the concepts that I'm gonna be showing, but for time purposes, I'm gonna try and keep it as simple as I can. Now, the first thing I look at is support and resistance on the 4-hour and the daily. So we look at support and resistance zones, floors and ceilings. That's the best breakdown that I can give in terms of what support and resistance is. So now, once I have that, I mark it up and then I create a square to make it into a zone. So that's a support and resistance zone there. That's a support and resistance zone. And that's another one up here as well. So now, price was closest to this support and resistance zone here. Then what we look for is structure. So we look for higher highs and higher lows when it comes to bullish structure. And then for bearish, lower high and lower lows. As you can see here, we had a low, high, lower high, higher high, lower high, higher high, and so on and so forth. But we was within this range, where it says 4-hour BOS, 4-hour BOS. This was our trading range. And we was bullish, so we were looking for buy setups. So now if we go to the candlestick chart, we can now see that here we had a bullish engulfing candle. We can call it a demand zone. Supply zones are for sells, demand zones are for buyers. We're gonna be buying low, selling at highs. Now we'll go down to the 1 hour because you're not gonna get entries in the 4-hour. But you can break down zones from the 4-hour to the 1 hour to the 30 and so on and so forth. But you don't want to refine it too much. So there was a 1-hour zone here that was also a 4-hour zone. But then we also had a demand zone right here. And price reacted from this zone. If we press play, we're going to see that price reacted from that zone. But what we needed to get into a trade, and this is known as a confirmation entry. So instead of just risking it and price comes down, we press buy straight away. We need to actually see price break some structure. So this was the structure point that needed to be broken. If we go on the line chart, it's easier to see. This is just bodies. So the price came down. That's a lower high, that's a lower low. We need the price to break this. So now we're gonna wait to see if price broke the structure. So look, price is at our zone. Perfect. We just broke the structure. It's easier to see on the 15-minute chart. So look, we can see price broke that structure. And then it also even says change of character. So we was on a 4-hour. We saw that price was bullish. We had a trading range. We had a support and resistance zone that price tapped into. It's now tapped into it and broke structure. So now what we need is for price to retrace, come in so we can buy it, and then it can go towards our target. And why is this our target? If we go back to the 4-hour zone, we've got a nice gap. It's going to be easier to see on the 1 hour. So I'm going to go to the 1 hour, but there we go. We've got a very nice gap, and gaps are usually filled. The strategy that I'm breaking down, it works 70% of the time. So majority of the time, if you see these things that I'm saying, it's going to work. Nothing works all the time in Forex. That's just the way things are. But that's why we have risk to reward. You want to be risking, you want to be going for trades that are risk reward of 1 to 3 or 1 to 4. Meaning that if you're trading, if you lose, let's just say $100. You lose $100 on your losses. When you win, you make $300 to $400. You're making 3 or 4 times more than what you would have lost. This is what allows you to have a 70% win rate, but still be profitable. So there was a gap, and gaps are usually filled. So that's why that was the target point. So now we've broken structure. Go back to the 15-minute. We have broken structure. So now we just need a retracement, and we're going to get in for a buy. And what I'm going to do is once price goes back down is when I'm going to click buy. But I don't think you can you do it beforehand? I'll wait till price comes down a bit more. And I'll show you that I got into the trade live and how much I made, because, you know, seeing is believing and numbers don't lie. So perfect. We are now at the entry point after we've broken structure, after we changed character and we had a retracement, yeah? So we've just bought. Now look, the stop loss is here. The take profit is right here, yeah? And we're gonna confirm. All right, perfect. So now let's close this. So now we're gonna see what happened. Price came up. We was in some profit straight away. In some profit again. So now I got risk free after a good structure point is broken. So once we break this structure point, I would have gone risk free, or maybe even a bit before as well, yeah? You could have got in with a buy limit. That means that as soon as price comes down and hits your entry point, you'll just put in, you set where to get out if the trade goes good, you set where to get out if the trade goes bad. Or you could have done a market execution, but you would have had to see price be there to execute, because that's executing now rather than at a certain point. And what you can do also is you can allow price, you can set an alert which will allow you to know where price is at certain points. So yeah, so now we're in profit. So here is where I would have made the trade risk free, and I actually did. Or what people could have done is maybe taken partials, made it risk free, and you can get ready to take more entries if price comes back down, because like I said, we're about to break structure right here. So if price comes back down, you can take some more entries. There's so many different things that you can do. It just depends on your risk tolerance. So now if we let price play some more, we was in some more profits, but price started just consolidating, going sideways. But it ends up coming back down very close to entry. It might have even hit the entry point. Yeah, so it more or less hit the entry point. So here is where you could have got in again and put some more entries, or you would have came out risk free. But because price had made some good structure points, this is why I got into the trade again. So I got in again. We'll just let price go some more. So it was consolidating for a while. All this is just building up momentum, building up liquidity to actually make the move go and happen. So here we are in again. Our price started going up, and then this is where it really started getting momentum, and bam, we hit the take profit point. We literally hit the take profit point, as you just saw. And now I'm going to show you how much was made on this trade by myself and by one of my students. So it should be appearing on the screen right now. And let me just break down what people could have made. So 170 pips here, and it's a 1 to 4. So you're making 4 times back whatever you was risking. But let's say you risked 0.01, you would have made $17. 0.1, $170. A standard 1.00, that's $1,700 in one trade. That's what we made. Men lie, women lie, numbers don't lie. That's what was done, and that's the strategy. This is a video just to show you guys that I actually trade and I know what I'm doing and what I'm saying. I ain't just a marketer. A lot of people just see certain videos and think, yeah, this guy, he doesn't know what he's doing. He's just marketing, trading. But no. I'm not like them people. I know how to trade. I know what I'm doing. I've been trading since 2020, so respect to me, man. Just put some respect on it, yeah. But yeah, man, that's it. There'll be more breakdown videos that I'm gonna do. Any questions, just hit me up on my Instagram.
Key Mastermind.
If you want to be part of the community, just hit me up and I'll take it from there. Peace.